So 10 years ago, this past September, my life changed. That's when Lehman Brothers filed for the largest bankruptcy in history. I was a managing director at Lehman at the time. I'd worked there for over a decade. And I'll never forget walking into the office at our headquarters in Times Square that morning in September, and a few hours later walking out with a box full of my stuff. To make matters worse, my wife also worked at Lehman. And I really learned two important lessons that day. Number one, that disruption happens very quickly and without warning. And number two, make sure you and your spouse diversify your employment. But if you look at what the fundamental cause of the global financial crisis was, we believe that fundamentally banks were selling products that consumers didn't need. As we say, financially unhealthy products. And if you look at also what consumers believe are the most important things for happiness, at the top of most people's lists are financial security, or as we say, financial health. But this is exactly where the banks, we believe, have failed. All you need to do is look around and see that banks today are making record profit while consumers have record debt. And this is why we believe that the digital transformation that's happening right now in financial services, which is one of the most profitable industries in the world, represents a huge opportunity for investors and has already created some of the most valuable fintechs, both public and private. It's also why I left Wall Street and joined Mogo, because I believe that the opportunity for financial technology is to do a lot more than just make more convenient products for consumers, but actually make it easier for them to make smarter financial decisions. So what I want to talk to you today about is why we believe Mogo is uniquely positioned in Canada to lead that digital transformation and help Canadians get financially fit. As always, my statements are under safe harbor. So our mission is very simple: to make it easy and engaging for consumers to get financially fit. Importantly, we're focused on a lot more than just vanity metrics of user growth. We're focused on delivering real financial results. And our latest quarter, we think, highlights that this strategy is working. Our core revenue was up 80% year over year to an annual run rate of $60 million. Subscription and services was the primary driver of that growth, up 111%, and now represents over 50% of our total revenue. 3.5 years ago when we went public, lending was close to 100% of our revenue, so we've really transformed the business since then. And we continue to grow our member base at a very strong pace. There are a number of highlights that I want to go over with Mogo, but I'm going to touch on a few that I think are most important. Number one, we've now invested about $150 million in our platform. We have 750,000 members in Canada. We have a $300 million marketing partnership with Postmedia, which I'll touch on more, and we have $60 million of annual run rate. We believe we have the largest independent digital distribution platform in financial services in Canada, which we believe is very valuable in the financial services ecosystem. Number two, we are building a platform company. Platform companies, in our mind, like Square, like Shopify, get premium valuations ultimately because they prove their ability to continue to launch new products, expand their addressable market, and find out new ways to monetize their customer base. And we've now done that, moving beyond lending into ID fraud protection and into prepaid card, into mortgages, and a number of other products. And we're about to launch into new areas, including Mogo Wealth. There's also massive barriers to entry in this space. The biggest barrier being capital. The amount of capital you need to raise to build a business like this is significant, and we believe we're the only independent fintech in Canada that has done that, and we think it's prohibitive for others in Canada to get there. To get a sense of what disruption is going on in fintech, we think it's probably best to look at what's going on in the US and in Europe, which has a much more evolved fintech landscape. In the US, it's dominated by a number of independent single product app companies that are helping consumers with a credit score, helping consumers invest, do free stock trading, or convenient access to credit. We believe the winners here, though, will be the ones that bring all these products into one single account, similar to your bank account, And now you're seeing in the US, most of these players start to do just that. They're raising money to effectively bring a whole bunch of other products into their account, and then all of them will be battling it out to see who are going to be the winners. This is where we think Mogo is unique, even relative to our US peers. We've already brought 6 products into our account, so we are really delivering a holistic solution to consumers. And we actually think we're closer to our peers in Europe. Companies like Monzo, which recently raised money at about a $1.5 billion valuation. They have a similar size member base to us and about half of the revenue scale. So it gives you a sense of the valuations in the sector. So what is our solution? Our solution is, the main solution is downloading the Mogo app. It'll take you 3 minutes to open up an account with us. And with that, you get access to 6 products that we believe are core to managing the consumer's financial life. Ultimately, think of Mogo as a digital alternative to the banks. We are continuing to add on more products where ultimately we believe we will be able to offer all of the products the bank offers without actually ever becoming a bank, and I'll talk about that. But today we have Canada's first free credit monitoring service. By the way, the account is free. There's no monthly fee on the account. We also offer ID fraud protection under Mogo Protect, which I would encourage all of you to have a product like this if you don't. As we say, it is a certainty that all of your IDs will be stolen if they haven't already been stolen. And the only thing you can do is stop fraud from happening once your ID is stolen. And basically, Mogo Protect, $8.99 a month. It's a subscription product, so it's one of our premium products. Gives you a real-time push notification to your phone if there's any activity on your bureau. Our next product is our digital spending account with a prepaid Visa card, which is really designed to help consumers control the overspending that's happening on credit cards. This sends a real-time push notification to your phone, telling you what your balance is, what you've spent. Think of this as a real replacement for debit card spending. In Canada, there's $200 billion of debit card spending, and that's consumers who like the control of using the debit card because they don't like using their credit card where they wind up overspending and have bills at the end of the month that they're not ready for. We have several other products, including our mortgage product, where we get an origination fee, our crypto account that allows you to buy and sell Bitcoin, and we partner with an exchange on the back end, as well as unsecured loan product. Our platform I talked about a little bit. We've invested over $150 million in the platform. We have almost 100 developers working on our platform. Again, there is no shortcut, as we say, to building a best-in-class digital experience. If you look at the fintechs around the world, about half of the billions that they've raised are going into building the brand and acquiring customers. We didn't have that kind of capital, so what we did is did a partnership with Post Media. It's a 5-year deal for $300 million, where we get $60 million of marketing spend a year, but we only pay them $2 million of cash a year because we gave them warrants in the company, 1.2 million warrants. So this basically gives us a marketing budget equivalent to some of the biggest financial brands in Canada, and gives us the distribution and reach to their 18.7 million monthly readers. So our customer acquisition cost is under $20 per member. To give you an example of our scale, last year we opened up 210,000 accounts. Royal Bank said last year they opened up 300,000 new accounts. So we have significant scale, even compared to some of the biggest players in Canada. If you look at the overall competitive landscape, really what's happening with fintech is it's driving the transformation to digital. Consumers don't want to go in a branch anymore. They want everything accessed on their phone. As we say, the biggest banks in Canada have the capital to build out their digital channels, and they're doing that right now. And they will all have varying degrees of success. But outside of the biggest banks, you have a massive industry, 240 credit unions, a bunch of tier 2 banks. They, unlike the banks, don't have the unlimited capital to invest in building out this platform. They don't have national brands. Of the 240 credit unions, almost 230 of them are actually declining each year. The largest has 500,000 members. We have 750,000 members. So we're effectively really positioned to benefit from the challenges the tier 2 players are having in this digital transformation. And they actually become potential partners for us as we look to expand our solutions. We're in a massive market by any definition. The Canadian banks this year will make over $100 billion of pre-tax profit. Our plan in 2019 is to launch Mogo Wealth, where we're going to bring best-in-class investment products into our account and really sort of round out our total solution. Included in that will be a checking and a savings account. I talked about the credit unions. Effectively, we're talking to banks, credit unions, and other asset managers about bringing their products into our account. So imagine in the Mogo account, you could open up the Mogo savings account powered by XYZ Bank. If you go to one of the main banks in Canada today, on a high interest rate savings account, they'll pay 0.9%. Best-in-class credit union will pay 2.3%. But for most consumers, you wouldn't know about it, and it'd be too much friction for you to get that account. Our goal is to bring those best-in-class products right inside our app so our members can access those very easily. And ultimately, we effectively become a replacement for your bank account. Our most recent quarter, Q3, I mentioned we reported 80% year-over-year core revenue growth, positive EBITDA of $1 million, and we had $25 million of cash on our balance sheet. We've had 6 quarters in a row of accelerating core revenue growth, and we have multiple significant additional growth opportunities. The big opportunity for Mogo today is we're generating about $90 of revenue per member per year. The average credit union generates $1,300 of revenue per member per year. So our goal is to continue to grow our member base into the millions and then continue by adding on other products, increase the monetization of that, and drive our average revenue per member higher than where we are today. Lastly, we're listed on the Toronto Stock Exchange and NASDAQ with very high insider ownership. Management teams owns about 20% of the equity, so we are very much aligned with investors and our shareholders. And I think I'm out of time here. Thank you.